Hi, my name is Laurent Meunier, and welcome back if you've been here before. So, the average Canadian retiree isn't really going to associate life insurance with wealth generation or that it's useful while they're still alive. But certain types of life insurance can play a big role in the lives of older Canadians, especially if they want to leave a legacy. So people often say, kids are out of the house, I don't have a mortgage, why am I going to pay for life insurance? Some people really should. So many Canadians know about term insurance, which you usually get for 10 years or 20 years or 30 years, and which accounts for like 3/4 of the life insurance market in Canada. These are usually set up to help cover the salary of a parent in case they pass before retirement age or to protect a mortgage, and it's usually for the kids. When you're retired, you're often not going to buy term insurance, but you should look at permanent insurance, which can help to create an estate and conserve it and make sure it goes to who you want it to go to. So permanent life insurance, as the name suggests, covers you until forever, no matter how old you are when you pass. And there's 3 types. There's whole life, there's universal life, and there's term to age 100. Whole life is generally the one that we work with the most because it's got a cash value component. As well, when it's participating, then you receive dividends from the participating account of that insurance company. Universal life insurance also has similar characteristics, has more flexibility on premiums, and also has more flexibility on investment selection. And term to age 100 is exactly what it says. It's a term insurance that covers you until age 100, but it doesn't have the cash value or the investment component. Now, all of these insurance types have tax benefits as well as estate planning benefits. The death benefit on all of them is tax-free, and it can serve as a gift for the beneficiaries or to cover taxes on the estate or to equalize an estate. Now, if leaving a legacy to your family is important for you, one big benefit of permanent life insurance is it guarantees a cash lump sum payment to your beneficiaries when you die. Now, why is that important? Well, it allows you way more freedom to spend your retirement money while you're alive because you don't need to worry about the legacy. You know that the legacy is going to be paid out from the insurance, so you can just spend all your money. You don't need to try to save some from the retirement bucket so that you can leave something behind for your kids or for charities or for your spouse. Usually, the reason that people in retirement age don't look at permanent life insurance is usually it's a little bit expensive. But when you look at the benefit of the guaranteed payout to your kids and that allows you to spend all your money while you're alive, it can actually make a lot of sense. Most people want to cut their costs in retirement and the premiums are not for everyone. But if you do want to leave a tax-free gift to your family when you pass, this is probably one of the best ways to do it because it can pay out faster, and it also beneficiary designations on a life insurance policy don't get disputed like money being passed through a will can be disputed. So ideally, to save some money on those premiums, you should probably look at buying this when you're younger. And usually when people are younger, they choose a less costly option like the term insurance to serve their immediate needs, to replace lost income if they die or to pay off debts or for fixing things if they pass away too early. But when you get older and you're in or near retirement, it's when the utility of permanent coverage becomes evident, when the premium costs are significantly higher. So in a way, you're kind of paying for it with your age and your health as much as you're paying for it with money. When you're in retirement age, the existing term coverage often has an option to convert to a permanent policy without having to go through underwriting again. What does convert mean? It means you can change your term policy into a permanent policy without having to do a medical. Your premiums are still going to be higher because you're older now, but we can help tailor that policy to fit your needs. Now, if you're able to set up a whole life policy when you're in a retirement age and you're able to put a decent amount of money in it, you could also gain access to the cash value portion of that policy. You can take loans, which would help for any sort of like emergency funding or whatever else you might need. A lot of people, though, put the money that they don't need into their life insurance policy to ensure that it pays out tax-free to that next generation. Really, the number one thing that you want to look for when you're a retiree looking to set up life insurance is to work with a good professional, obviously someone like us. We have lots of content on life insurance on our YouTube channel, on our website, and on all these social platforms, whichever one you're on. That's it for today. Make sure that you hit the like, you hit the subscribe. If you have any questions, leave a comment or you can message us through the website. All these things help the algorithm push these videos higher up to more people that are just like you. If you do want to talk about this directly with somebody on our team, go to our website, safepacific.com, and you can fill out the form. We'll book a meeting with you. We'll see what your situation is and what your goals are, what you're trying to do, and see if we can help. Any messages that you send through the website will come directly to me, and somebody on the team is going to reply to you within 24 hours on business days. That's it for today. I will see you next time.